Ladies and gentlemen, good day and welcome to Somany Ceramics Limited Q3FY22 Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Naveen Agarwal, Head Institutional Equities at SKP Securities Limited. Thank you and over to you, sir.
Good afternoon, ladies and gentlemen. On behalf of Somany Ceramics Limited and all of us at SKP Securities, it is my pleasure to welcome you to this financial results conference call. We have with us Mr. Abhishek Somany, Managing Director, along with Mr. Saikat Mukhopadhyay, CFO, and Mr. Sunit Kumar, AGM Finance. We'll have the opening remarks from Mr. Somany, followed by a Q&A session. Thank you, and over to you, Mr. Somany.
Thank you, and good evening, ladies and gentlemen, for the Q3 earnings call of Somany Ceramics. It's been a fairly volatile quarter for all of us, with the unprecedented commodity price increase, freight increases, the onslaught of COVID coming towards the month of December. So that obviously did not affect too much of the business. But as far as we are concerned, we've had a growth of about 20% on a standalone basis and 19.5% on sales value on a consolidated basis, and we've grown by about 5% in the quarter in terms of volume. The reason for slightly lower growth on volume has been that there's been unprecedented growth on increase in prices and there was a non-availability of material in Morbi. As you all know, we are dependent on our PVT segment purely on Morbi, and there was a lot of plants shut from Diwali onwards. In fact, 10 days before Diwali, primarily because of the price increase and the pressure on gas pricing over there, and therefore we were not able to secure approximately 25-30 crore rupees of material, which we could have done between November and December, mostly in the PVT segment, also in some part in the GVT segment, in the north part of the country and the west part of the country. So there's been a little pressure, and other than that, it's been a fairly decent quarter for us. We've grown fairly well sequentially and also YOY. The margin obviously has been under pressure because of the gas price increase, single-handedly the gas price increase, and obviously along with the gas price increase certain other commodities go up. But I think it was in line with what we had envisaged. Obviously the extra 25-30 crore rupees of sales which we did not get, that would have further improved the margin by approximately 1 to 1.5%, so that would have been more in line with what we had projected at the beginning of the quarter. The ceramic segment has remained approximately at the same level. At the PVT segment has gone down by 2%, and the GVT has further gone up by 29, from 28 to 29% of our total sales. The other thing which I need to report is the bathware. Bathware is inching up. We've done a 20% growth, and I think will be even better in quarter 4. Gas price, like I said, has been under pressure. So we are on 3 different contracts in the gas price. Our northern plant is on a 3-month moving average contract, in where the prices have moved up sequentially from 40 rupees to 43 point something rupees a standard cubic meter. In the west, in Morbi, it has moved up from 38 to about 57 rupees a standard cubic meter on an overall basis. So actually currently it's at 62 rupees a standard cubic meter, and in south it's approximately 92 rupees a standard cubic meter as we speak, but then that happened at a staggered effect. So overall we were at approximately 60, but this quarter we will be at a 90 rupee level unless this goes down over the next few months, which is predicted to. The other salient point is that our capacity utilization has been pretty good. We've been at 95%, almost 100% on the tile front, 100% on the faucet front, and sanitary ware until 15th of November we were at 50%, but after that we've been at approximately 100%. The brand spend is in line. Brand spends happen only in quarter 3 and quarter 4, so that's been in line. You must have seen us visible on the airports and also on various cricket matches, which has been a new for us, and also across the channels, across news, north, south, east, west. The trade addition has been also fairly robust. We've added 150 dealers in the first 9 months, a net addition. So this would go up further in quarter 4. So we should be at about 250 dealers. Considering the first 3 months, nothing really happened because of COVID. The debtor days is under control. We have further improved our debtor days. It's gone from 51 days to 42 days, and this will further come under control going forward. Net working capital, obviously, as a result, has also gone down from that point of view. Debt equity is at 0.4. Net debt equity is nil. We have increased prices in the last quarter to offset some of the gas price increases. So approximately a 7 to 8% increase. And 80-85% of our input costs we've been able to increase and pass on, but that's come with a 15-day lag, because whenever the gas price goes up, we can only pass it on 15 days later and not immediately. As far as Q4 is concerned, Q4 I think we have partially tied up the volume which we lost in Q3. So obviously the volumes will be better for us in Q4. That's for sure. And gas price seems to be under control, except in the north, which is the 3-month moving average on oil. So if that doesn't move up very, very significantly, it has signs of moving up significantly. But if it does not move up significantly, and also the other variable is that if this goes up, maybe in the south and in the west, things may become better, because there we are on spot. So to that extent, the volume will get better in Q4. Margins obviously will remain under pressure with the gas price increase, or increasing trend. Therefore, we are predicting that the margins will be in the current range, plus the little benefit which we will get from the extra volume of Q4, both in the sanitary ware bath fitting and on the tile segment. Other than that, I want to report that we are in line for the starting of our plants, the 3 plants. The first plant we believe will start in the south or the west. They're literally a week apart. So by end February, one of those plants will start, and early March, the second plant will start. And the northern plant, which is the floor tile, the wall tile plant, will start closer to March end. So we will have all these plants up and running by this quarter itself, which means for next year we will have all the plants up and running, which should significantly increase our volume and also give us a good impetus on our margins. Happy to announce that we have, as you must have seen in our announcement, we have also planned to start a slab plant, the big size slab plant, where we can make thicker tiles and larger format tiles. We are going to do this in Morbi, and it's still work in progress. More detail will be shared with you on the next quarter, on the quarter 4 and the yearly earnings call. By that time, hopefully we would have ordered the plant, but more details on exactly the product, the capacity, and to the last exactly what it would cost us would be announced. But we are going to be putting this plant again on virtually 100% internal accruals. So this is for me, and I would then pass it on to the question answers segment. One last word is that overall we are very, very bullish of the trend. This is an aberration of the gas price increase and commodity price increase virtually worldwide. But other than that, we are extremely bullish, and therefore we have very excited for the new 3 plants to start, and therefore we have already preempted better demand for the bigger size tiles and announced the next phase of expansion. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Thanks for a detailed opening presentation and also for keeping your balance sheet and working capital in tight controls. Sir, you talked about the gas prices. If you could again repeat those numbers from what was the average prices for you in North, West, and South in third quarter and similar quarters YOY Q1Q?
YOY and Q1Q. YOY is a massive increase. There's no point even going there. An average of 25 rupees. Today we are averaging in various places between 44 rupees, 60 rupees and 90 rupees. So there's no head or tail to that. But I think sequential would be a better base
Sure.
because this kind of unprecedented increase we've never seen in our life. But sequential could be a better base. Sequential, our north price used to be 40, it's gone up to 43.5, 44. The west price used to be 38, that's gone up to 57. And south happened in a staggered way. The south was 44 and that went closer to 60. And that's further gone up in December, so that's the average. But going forward, north we see upwards of from 44 going up to 50 in the next 2 months. But then west and south, we do believe that there would be certain respite over there because spot from the November levels has come down. So from that point of view, we're yet to see when those prices will go down. West and south should go down either in the next 15 days or definitely by March for that matter.
Okay. So when you say north 50, this is the peak, quarter end price you are saying, or is an average price of 50 rupees which you expected in north?
No, I'm not even sure if it's the peak quarter end price. It will probably be in April this price will come. So I think we will be in the 46 to 47 rupees in the quarter. But I'm just giving you a trend as to where the prices are going. And over here, it increases month on month. So I think by April end of May, we should be looking at 50.
Okay. And based on current prices, January prices, what were your average prices in West and South?
I just mentioned that around 60 rupees.
Both in West and South, and now you expect that in next 15 days there should be some cooler.
South is 90 rupees. South is 90 rupees.
South is 90 rupees, okay.
The West is 62 rupees.
West is 62 average. And sir, where is the South gas coming from?
Same as West. South gas comes from IOC from spot.
IOC spot, okay. And second question pertains to your news.
For other members who are listening in, South is 100% on spot. West is 50% on local, 50% on spot, somewhere there, ballpark. And North is on RAS gas, 100% on RAS gas.
Right. Great. And so second question pertains to your capex. Now that you're timely executing your expansions, almost and the new capacity which you have 4 million large tile format tiles which you are setting up. So this 170 crore capex, which is that the total capex which would be required, or this is your investment?
This will be the total capex. What do you mean your investment? I mean, in the sense we're doing it.
The subsidiary is 100% owned?
100%, yeah. Currently, it is going to be our investment and it's going to be 100% internal approval.
And sir, by when this project would be expected to come on stream?
Like I said, it's work in progress. So you should expect the project in first quarter 23.
Oh, so within a year time frame, you're looking this to be up and running?
Yeah, within a year, maybe 13 months.
Okay, great. And if I can squeeze in one more question on the demand side, you said that volume growth is looking strong in this quarter. But there could be some pressure on the margins because last year fourth quarter margins were quite strong, around 16%. So would that be difficult to achieve? Because if there is a good demand, would it not be able to pass on the cost inflation that you have witnessed?
Yes, absolutely. We can only pass on about 80-85% of the cost. And last year, prices were absolutely at the rock bottom. Last year, same quarter, right. The gas prices. To that extent, it's this kind of margin we'll probably see when the entire plant comes into way, probably a year later, if the gas prices are low.
Okay. And sir, we also see subsidiary, this outsourced volumes are growing at a faster pace.
Can we go to the next participant, please, and you can come back in queue?
No issue, sir. I'll come back and queue. Thank you.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permit, please come back in the question queue for a follow-up question. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Good afternoon, sir. My question is, these 3 new plants which are going to be operational, what is the total investment they have made? What is the approximate revenue it is going to generate? And what will be approximate addition to our profit that these 3 plants will contribute?
3 plants.
So we have clarified this earlier also. This 3 plants together at a full capacity utilization would be giving us a revenue close to 250 to 300 crore rupees, depending upon the product and sizes and all these things. So this is a broad range which we have clarified in earlier calls as well.
And what will be the contribution towards profits?
So it would be 20% in terms of addition in capacity. So the 20% capacity addition would be there. As far as profit contribution would be difficult to put a number to it, but yes, it would be a decent profitable segment from these 3 products, considering these are putting a high-end products. So all 3 plants are would be producing high-end products, GVT and the high-end wall tile. So it would be a profitable margin accretive.
Oh, thank you very much. Thank you.
Thank you. The next question is from the line of Kaushik Poddar from KB Capital Markets. Please go ahead.
Yeah, see, last year, this quarter, that is the March quarter, has been a great quarter for you guys. So how do you see the volume growth in this quarter? And what is the volume growth you project for the next quarter, next year?
So next year, I don't have it off the hand, but those 3 plants, like I said, we have shortage of material. So those 3 plants coming on stream, we would sell that much. So there will be an addition of 10 million square meters. You can do the math. So I can let you know. I don't have it off the cuff. As far as this quarter is concerned, we are on a high base from last year. I think if we're able to, garner that kind of material, we'll probably have a little bit of growth. Otherwise, we're looking at a very marginal growth in volume or a flattish growth in volume. Like I said, we're not being able to get the entire material of PVT from Morbi because there the prices have gone up and some plants are still shut for the PVT. And like you all know, if you've covered the tiles, the PVT plants are very few. There is most influxes in GVT and ceramics. So to that extent, we are, not able to garner 100% of the PVT material. And that is not because there is a problem with PVT in future. It is a question of current pricing, where the PVT pricing and the GVT pricing are more or less the same at the current gas pricing. The minute the gas prices go down, all these PVT plants will start up and running and we'll get more than enough material. So it's more of a momentary lapse currently. I think the guidance for next year can be a decent double-digit growth, which I had said even in the last quarter. So a high double-digit growth is what we're looking at for the next next year.
Okay, so what you're guiding is that it's more the supply side problem rather than the demand side problem. Is it a right conclusion?
Yes, supply side problem mostly on the PVT, and that is also because of the current situation, not otherwise.
No, but the way whatever experts are predicting on the oil scenario, I mean, the oil is expected to be very, crude price is expected.
Gujarat is not on the oil. Gujarat is purely on gas, and gas is not really moved up.
But gas price has a correlation with oil price, right?
No, not on the spot market.
Okay. So that you don't think the gas price to going up next year, though if the crude prices go up, is it?
No, I think gas prices by first quarter will start going down globally.
Okay.
I'm not an expert, but generally in summer it goes down.
Okay. Now I was just predicting the U.S. gas prices. They at least have gone up in the month of January. That's what I see. So I don't know whether that has a relation with the price.
We don't get U.S. shale gas. We get basically spot from the other countries. But what I've learned is that the spot has gone down a little bit from the peak of November.
And these gases are sourced from the Middle East only, or what is the source?
I have no idea. You need to ask IOC and GAIL that question.
Okay. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital Partners. Please go ahead. Deepak, may I request you to unmute your line from your side and go with the question, please?
92.
Hello, am I audible?
Yes.
Okay, sir, thank you very much for the opportunity. Sir, I just wanted to understand in the current scenario when the gas prices are high, so what sort of normalized EBITDA margin range that one might be comfortable with? Maybe next year? Yeah, FY22.
So depending on the, I think at current prices, the current EBITDA margins you have seen, if the volume move up, obviously that will offset. Already gas prices are absolutely at record highs. If it goes up, it will go up $5-10, but not from 25 to 90 like we've seen. So going forward, I think we are looking at much better EBITDA margins because volume will go up. And at the end of the day, I have maintained when we, even in the earlier days when we had flat growth, which is 2 years ago, I kept recording that at the end of the day, it is a volume game in tiles and capacity utilization fortunately is decent. Therefore, it will offset it, and it is our own production this time and value-added production for GVT and other products. So to that extent, our EBITDA margin will obviously move up regardless of gas price going up or down. Obviously, if the gas price goes down, then from the current base, you will see a huge increase. If not, from the current base, you'll definitely see a decent increase. That's the only guidance I can give you, unfortunately, because I don't have any PI on where the gas is moving in such a volatile situation. Probably by February, March, you will have a better idea. But what I can definitely say is that 10 million extra square meters, clearly we are looking very, very good as far as that is concerned, because the rest of the balance sheet is on the check and getting only better. Our debt is getting paid off, console level and also at the standalone level, we have anyway none. And working capital on the check, debtors are on the check, stocks are on the check. So from that point of view, we are not making any mistakes. It's a question of gas price versus volume. We're looking at decent volume. We're being able to sell capacity, eagerly waiting for the new capacity, which will definitely improve EBITDA margins.
Sir, that's fair what you said. But just on an assumption that gas prices remain stable at the current levels and the volume improves. So on that case,
in a different way, we were looking at a 1.5% to 2% EBITDA increase when the gas price is not gone up, considering we would look at volume. That's the same increase we would look at.
Correct.
And because it's gone down, if the gas price goes back, this would be a bonus from current levels. You understand what I'm saying?
Yeah. I understood. Yep. That's it from my side. All the way.
Thank you.
Thank you. The next question is from the line of Suraj Navandar from Sampada Investments. Please go ahead.
Hi, sir. Good afternoon. So this new plant which we are planning for large size format.
I can't hear you. Can you repeat that, please? We lost you for a minute.
Hello. Can you hear me now?
Yes, please.
Yeah, this is the new plant which you have announced in Gujarat for the large format tiles. What sort of margins do tiles attract usually? Are they much better from what we are doing currently, or they are in the same range?
So the plant will produce both the current range of products and also the higher range of products. So how much of what it will produce, like I said, it is still work in progress. I would be able to answer this question more sharply in the next couple of months, exactly when we do the math on what products we will produce, how much. But yes, your assumption is correct that it is much better. For at least 50% or more of the plant, it will be much better.
Okay. Thank you, sir.
Thank you. The next question is from the line of Achal from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. My question is, you mentioned that sourcing has been a challenge specifically because of the PVT tile front. If I look at the numbers, in terms of the outsourced tile volume, it is already at closer to the peak number what we have done in the past. So is it that the incremental capacity tie-up is you're finding it difficult? Is that the case with even other competitors as well?
With peak capacity, please don't take. The market's grown, we've grown, our balance sheet has become better. Our number of dealers used to be 1,000 active dealers. We have at peak of 2,200 active dealers currently. So everything has changed from a supply point of view. What we are saying is that currently PVT, there is a challenge because a lot of plants are shut. A lot of people are finding it difficult to make PVT at these gas prices. So either they have moved their lines temporarily to something else, or most of them are shut. So it is more of a momentary thing rather than a long-term thing. So from that point of view, it is actually specifically PVT, and also from a point of view of GVT, we've not got enough material, not to this extent, but to some extent in the south and also in the north. So the basic material we've not been able to get and source because there's been challenges around procuring that material. But all of GVT, we will be 100% self-reliant the minute these two plants start, which is my west plant and the south plant. PVT will still be under pressure, and that is what I predict, what I said in the beginning of the call. Wall tile also, there's no pressure there. We will be totally self-reliant the minute our plant starts in the north.
Okay. You mentioned 7 to 8% price hike you have taken, and about 80-85% you have passed on. So have we announced anything in the current quarter? And not yet?
No. Current quarter gas prices haven't moved up, so I have no reason to move it up.
Okay. Okay. Understood. And just last question, with respect to the capacity utilization for faucet, it's at 102%. So, and if you look at the revenue growth for the bathware as a whole, it's just 13%. So I just wanted to understand, how do you see this piece going forward in terms of the growth and the margins?
Revenue growth is 20% as far as bathware is concerned, YOY. So to that extent, in the bathware plant, we have enough and more capacity. We can start running another shift on that and virtually double our capacity. So very, very bullish on the bathware. The bath fitting plant and sanitary ware. We've not still used 100% capacity. It's been only one and a half months. Actually now 2.5 months since we're 100. So that also we are extremely bullish. In fact, we will be out of capacity in sanitary ware within 1 year, and we would probably have to go for an expansion there. Bath fitting, like I said, we have more than enough capacity because we're still running on, but like I said, I can improve the shifts or rather increase the shift.
So just to add, Achal, here, in bath fitting, we are already in the process of doubling the capacity, and that would happen at a fractional cost, considering already infrastructure and everything is built when we were doing at a first phase of it after the acquisition of the plant. So it's in progress, and it would happen at a fractional cost, the doubling of capacity.
Yeah, under 3-4 crore rupees would be, that's what you mean by fractional cost.
Understood. Thank you. I'll come back in the queue.
Thank you so much.
Thank you. The next question is from the line of Dhananjay Mishra from Somany Securities and Finance. Please go ahead.
Sir, with this 3 plant completing by April 2022, so what will be the incremental capacity after that available to us?
So currently we're at 52 million own capacity, which is JV and our own, and 62 million is our access to capacity. We are adding 10 million, which means it will become 62 million own capacity, 62 to 63 million own capacity, and another 10 million plus the outsourced capacity. So significant increase from that point of view.
So even with 15% increase in capacity, we are guiding about double digit.
20% increase, because outsourced capacity we can even enhance, but own capacity takes time to build. So own capacity is going from 52 to 62. So 52 ka agar main le लूँ तो it's
19.
Yeah, 19 to 20%.
Okay. So from these capacity we will have at least 50% utilization next year, or it will be more than that?
We are looking at an 80% more northward of 80% capacity utilization, maybe 100.
Okay. So considering these, we are expecting 12-13% kind of volume growth next year, right?
So to be fair, plants do take time to stabilize. So let us say that by mid-May, end May, we would be looking at 80+% capacity utilization.
And you said, sir, in initial commentary that 1.5% margin impact happened because of this material availability was there, and we lost 30 crore kind of revenue.
Approximately 25 to 30 crore. So anywhere between 1.25, 1.5% will be a margin impact, because that much volume we would have got extra.
So this 1% positive impact we can cover up in Q4 at least
If I'm able to garner the volume, which like I said, I have been able to get partial volume in place.
And lastly, on export front, if you could provide the outlook on export front, our company outlook as well as industry outlook.
Industry outlook, I'm unable to answer because it's all Morbi oriented. As far as we are concerned, it will remain in the same region of 2 to 3% of our revenue will remain for export.
Okay. And what is the ad spend, sir, for this year, Q3 and Q4?
This year, at the end of the day, we will be about 2.7, somewhere there, a percentage of revenue.
Okay. Okay, sir. That's all from my side. All the way.
Thank you. The next question is from the line of Dushyant Mishra from Sage One Investments. Please go ahead.
Good afternoon, everyone. I just had a quick question on the gas prices coming down. So let's say they come down as we're expecting by the end of February or mid-March. Will we be revising prices downwards on the product, or will we let those prices stay where they are and kind of make up on the margin front?
So unable to answer that question because I don't know the quantum of decrease. If it's going to be a small decrease, then no. If it's a very substantial decrease, then yes, we would have to slightly downward revise the prices. So unable to answer that question until we actually see what the gas prices would be. It's just too volatile across the world currently.
No, I meant just from basis how the spot prices moved downward by about 30% or so. What we're hearing, I just wanted to see if that's being factored into our projections right now, but fair enough. Do we see
if it's only the spot price which goes down, which means my gas price will only go down for the south, we would be able to retain our pricing there. But if it goes down in spot and the local gas, then we would have to downward revise because the pricing is actually substantially dictated by what happens in the Gujarat region.
Okay, understood. Got it. And do we see any competition coming up? Let's say about 6 months down the line, gas prices do normalize. And do we see any significant competition from the other Morbi players within the domestic markets, or do you think they are solely focused on exports right now and they will not close the thread at all?
Yes. So the kind of product and kind of plants which they put up are largely catered towards the export market. So I don't see them putting further pressure on the domestic market because beyond the point, price is not only the criteria where material said, it is various other things. So on one hand, we have plants shut in Morbi. On the other hand, I don't have material. So to that extent, that's kind of explainable. But even if we look at the 50 plants, 60 plants which have been put, they've largely been designed and to cater to the export market.
Got it. Understood. And just one quick question on the pricing front again. You said 85% of your cost increases have been covered under the current price hikes that you've taken.
Current hikes, yes. Current hikes.
Yeah. Right, price hikes that you've taken. What would be the remaining, when would that remaining 15% kick in? Is that going to be a revision that you take again, or are we staying here for now?
I don't think there is any other price increases here. Again, this is to the interest of other listeners also. So what happened with this unprecedented price increase is that is going to bite us sometime. If it's going to be a sudden drop in gas price increase, let us say, I'm predicting now, don't put two and two together, but I'm just giving you an outlook. So let us say hypothetically the gas prices has to come down in May, in June, in the same way, in the same quantum the way it went up. There would be 1 month of confusion where the dealers would start destocking, considering that the price would revise downward. So that will have an impact on volume at that time if it had to go down very substantially. So we are hoping from a long-term perspective, so if I had to look at my selfish interest, my balance sheet is not stretched. My working capital is completely under control and only getting better. My debt is completely under control and only getting better. So from my perspective, considering that I do see a long-term demand being completely intact, I'm hoping that let my margin be under pressure for the next quarter, 2-3 quarters, but I'm hoping and praying that the gas price does not go down in a huge quantum, because that will have downward revision in price. If it goes down slowly, we may on one side have pressure on margins, but on a long perspective, we would be able to hold on to certain price increases which we've done, if you know what I'm saying. So we are hoping that the gas price doesn't go down very substantially, in a very shocking manner. It goes down in a phased manner. That's my selfish, view, because our balance sheet is not stretched. But obviously, if you ask a Morbi guy, he would want the gas price moving down in a very large manner, very suddenly.
Right. He can be selfish, we can be selfish. Fair enough. Thank you very much. That's all from me.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Jignesh Kamani from GMO and Company. Please go ahead.
Hi, Abhishek. Recently, what we hear is Gujarat Gas has tightened the contract. Now, one has to, in Morbi, one has to compulsory consume 80% of the commitment, irrespective of the actual, whether it's buying 50 or 60%. Otherwise, he has to buy at sports price. So, any color, what will impact it will have on the Morbi guys and also on the your procurement from the Morbi?
I understand your question. This particular thing has happened in January, and this has been absolutely spoken with Morbi. I don't think there will be a single manufacturer also which will buy at the spot prices. So to that extent, there is absolutely zero fear. They will buy at the average price of 62 rupees only currently. Nobody would be foolish enough to not predict that and buy at 106. At 106, they are not viable at all. So I don't think that is a concern, and this is one of those moves between Morbi and Gujarat Gas, who've spoken and come to an agreement that for their books that if it goes up they will charge it, otherwise they are at 62. So this is all been spoken with and only then agreed upon.
But we reduce the production because earlier there was a liberty in terms of even if you have a monthly contract, you can instead of 100% you can buy 50-60% and go continue with that monthly contract. Now you compulsory you will charge till the 80% of the quota, right?
So the reduction in production also, they have not asked them to reduce any production to get the current rate. They were anyway reduced in production because, mind you, a large part of Morbi is export focus, and in the domestic there is only so much you can do with price. So with the export being under pressure because of freight rates, they were anyway running at a lower capacity. So nothing has really changed since the last 3 months from a capacity utilization point of view in Morbi.
Second, as you reiterated earlier, despite you can say lower export, you have not seen any dumping from the Morbi in any of the subcategory of tiles, right?
No.
Sure. And we have 3 plants coming up in the fourth quarter. So do you think there will be slightly higher overhead in the fourth quarter and maybe in the first quarter till you ramp up and reach to the full potential in revenue?
Higher overhead? You mean pre-operative, etc.?
Yeah, which can impact the margin, I'm saying, in the fourth quarter.
No, that won't be the overhead basically, because whatever the project related cost is there, that's a part of the project cost and nothing to do with the revenue or the P&L item or the earning statement for that particular period. So that way we don't foresee any kind of additional burden as far as overhead is concerned.
Okay. Thank you.
Thank you. The next question is from the line of Randeep Savla, an individual investor. Please go ahead.
Hi sir, I just had a single question. This is regarding our I wanted to know about post the complete expansion of all of our current capital expenditures, whatever we are doing. What will be our new manufacturing mix? The sales mix, and is the idea to reduce our dependence on the others? And increase our own manufacturing, or it's a overall expansion? of our sales mix?
Both. We are reducing our exposure and dependence for GVT tiles and ceramic tiles on outsourcing. And as far as PVT is concerned, we are still exposed completely to outsourcing. So on the GVT front, which is the value-added front, we are reducing the dependence, increasing the overall capacity, and also in the process, because it's 100% owned plants, it will further improve margin.
Can you be able to quantify how much difference will it make to our margin?
I just mentioned that at the beginning of the call.
Okay. Thank you.
Thank you. The next question is from the line of Venkata Samla from Tata Asset Management. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, one thing I just wanted to understand, maybe I was not very clear with this. So the supply issue that you were facing with respect to PVT, which happened in maybe starting November, so is that still persisting? And if it does, any outlook on when it is likely to improve for you?
Yes, it's still persisting. Marginally, we've been able to source some material, but this would improve only when there is certain slight reduction in the spot pricing of the gas, which will obviously have certain effect on making those plants more viable in Morbi, and they will restart operations.
Understood. And one last question, sir. How do you feel is the channel inventory at this point in time?
Channel inventory is low, because there's been an unprecedented increase in pricing, and they are all envisaging that these prices will start going down soon, and this is all Morbi related. Some of the smaller Morbi players who are absolutely cash trapped and stretched balance sheets in terms of cash flow, they are selling at silly rates and discounting to maintain their cash flow issues. Obviously, that's not an issue with us, and therefore the signal in the market is that the prices may go down. They also know that generally come summer, gas prices go down. So because of that, they are a little cautious. Prices have moved up very substantially. In the tile industry, as you all know, in 10 years, there's been no price increase, and this is the first time in the last 4-5 months, there's been 3, 4, 5 consecutive price increases, depending on which player and which area of tiles. So to that extent, the dealers are cautious. Channel inventories, I would think, are at probably the lowest right now.
Okay. That's helpful. Thank you. Wish you all the best.
Thank you. The next question is from the line of Akshay Chheda from Canara Robeco Mutual Fund. Please go ahead.
Yeah, thank you for the opportunity. So you did mention about the channel inventory for the tiles. So how is it in the faucetware and sanitary ware?
Similar thing, but faucet obviously is better. The channel inventory is decent. As far as sanitary ware is concerned, gas prices are not a very large portion of the expense like tile is. So channel inventory in faucet and sanitary ware, what I just mentioned in the earlier question, is not got affected so badly. It's pretty much the same as what it used to be maybe 6 months ago.
Okay. So second question is that now since you did mention that the tile prices have gone up so high, so still, what is it in the demand side that gives us so confidence of clocking a double-digit high growth for the next year also? Just want to understand where the demand is coming from and the outlook on the same. What is it that is giving us so much confidence?
Let me clarify. I think this is the confusion for most people have that tile prices have gone high, and people are commenting that tile prices have gone high. Especially, no disrespect to you, but especially the builder segment who buys from us, they're like coming back to us that tile prices have gone high. Very conveniently, they've forgotten that 3 years ago, they used to pay for a particular product 70 rupees. For the same product, they are paying 30 rupees. On that 30 rupees, there's been an 8% increase, which has made it, let's say, 33 rupees for argument's sake. How is that high? Just 3 years ago, they used to pay 70 rupees for the same thing, just to give you a perspective on how the prices have gone down also. So prices are not high. It is a relative statement that has gone up the first time, and it is higher than what it was 6 months ago. But by no stretch of imagination, tile prices are high. If I had to compare another material for tiles, which is a substitute material, namely natural stone, wood, from a wall perspective, paint or anything of that nature, we still by far and by a long mile, the cheapest material for any flooring or any wall where a tile has to go. So there is no competition to tile by a long mile. So to that extent, it really doesn't matter. This whole demand up and down is being played by the dealers and not really by the consumer. The consumer used to buy the same product at double or maybe more than double just 3-4 years ago. Today he's buying it at 8% higher than a rock bottom price. So does he have a choice to go to another material? He doesn't, because the next material is substantially more expensive for the same utilization or same application.
Okay, understood that. And so last question, if I may ask, so that now that the exports are a little bit on the lower side and because of so I mean, what is stopping Morbi from coming back to the domestic market? I mean, what are the reasons why don't you see that dumping coming back to the domestic market? Yeah, this was thank you.
Sell into the domestic market. Like I said, there are two reasons for this. One reason is that the kind of plants which are designed to produce a particular kind of product which is not does not get sold in the domestic market if you're not branded. It does not get sold in the domestic market at that kind of volume. That is one reason. Second reason is that beyond the point, they don't have the depth of distribution what industry leader and us have, or let us say the top 5 players have of the industry. They don't have the depth in distribution. Dealers, frankly, are not wanting to entertain them because at the end of the day, their prices are not as much of a difference that it used to be earlier, because GST evasion has come to a fair level where they've not been able to further evade GST because coal is not into play anymore and they need to buy gas. So to buy gas, they need to have a decent amount of cash flow in proper money and not in any evaded money. So these are the two reasons why beyond the point they're not able to dump in the Indian market. If they were, they would have done it, but the dealers are not entertaining them anymore.
Okay, this was very helpful. Thank you.
Thank you.
Thank you very much. The next question is from the line of Nitin Agrawal from VD Capital Markets. Please go ahead.
Good evening, sir. Thank you for the opportunity. So in the last call, you had mentioned that the industry will double in the next 4 to 5 years. It will become a 70,000 crore industry, the tire industry. So like, will this be driven by the export market, or will this be more of domestic demand that will drive this increase?
When I say that the industry will double in the next 5 years, that's my prediction, but it could be 5 or 6 years. But let us say it would be in the next 5 years where we would almost double. This would be a blend of export and domestic. I think export will constitute about 50-55% of the industry, and the balance would be domestic. If that was your question.
Okay, so that means so then that's mainly because of the exports and that you are saying that the industry might double.
Yeah, export is going to be a big demand driver and a big production driver for our industry.
Okay. So you have taken around 7 to 8%. Is this price hike? So is it reflected completely, or is there still any lag that is there in the realizations?
I guess that 15-day lag which was there, we had 2 price increases in last quarter. That's the only thing which is left, but you could say almost pretty much everything is visible. There would be a little more which will come in this quarter, provided gas prices don't move up further. Because like I said, there were 2 price increases and there was a 15-day lag over there. So that's still not visible. That will be visible now.
Okay, so like realizations will realizations improve from, will they go higher from here, or will they remain around the 330 range?
Realization will be from here. I think realization is going to be a function of the product mix. Very small amount will come out from the entire price rise being visible. It would more be a product mix issue, and that's on the realization front. But on the contribution front, it would be now the only offset is getting more volume.
Okay.
So this raw material availability that you're saying, this problem is only restricted to Morbi, right? It's not. This problem is not there in your north or south plants.
What issue?
The raw material availability issue.
No, there's no raw material availability issue. Raw material is abundantly available. It's the finished product which we are not able to get of PVT, polished vitrified tiles.
Okay, sir. My bad. And so just last a couple of more questions. So any reason for the low utilization in sanitary ware?
Yes, we had after the COVID one, we had the labor which had not come back. They came back around Diwali, and since then we've been at 100% capacity.
This is the sanitary ware. This is so the lower capacity utilization is because of labor shortage.
Yes, but that's behind us now. It's under 100% now.
Okay, it's operating at 100%. And so like this the capacity utilization in the new plants, you mentioned that it will be around 80 to 100% in the first year of operation itself, right?
Yeah, absolutely. So I would, yes, absolutely. We're looking absolutely at 100%. So it will obviously keep inching up as and when the plant stabilizes, but minus that, it would be 100%.
Okay, sir. That's it from my side. Thank you, sir.
Thank you. I request all the participants, please restrict to 2 questions per participant. The next question is from the line of Sneha from Edelweiss Securities. Please go ahead.
Good afternoon, sir, and thanks a lot for the opportunity. Just 2 questions from my end. Firstly, sir, what is the proportion of value-added segment as on today, and after this new plant commissioning, which is going to happen in Q4, where do we see this value-added portion going up?
Yeah. So the GVT currently is at 29% of revenue, and we are looking at this to be 35% of revenue, maybe a little more.
What about rest of the segment? Example of PVT and voltaics also? Similar projections there in case we can.
Voltaic pretty much will remain in the same. This thing PVT will go down. So PVT will go down by 3-4%, and GVT will go up by 6-7%.
Sure. Got that. And the second question was related to the slab segment. I know you have not given any clarity as of now, but assuming, let's say, the 100% of the utilization, I mean, in a particular plant, only if you're producing a voltaic, what is the asset turns in that kind of a business?
Asset turn would be not really about 1.5 to 1.7%, 1.7 times.
1.7 times. Sure. Got that, sir. Thanks a lot, sir.
1.61, and we just calculated it.
Sure. Got that. Just wanted a rough sense. Thank you.
Thank you. The next question is from the line of Karan Batelia from Asian Market Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yes, absolutely.
Yes. Sir, we've seen few Morbi plants making use of propane. So how do you see propane as alternate fuel? Can we save some of our costs going ahead as well?
Yeah, so a couple of our plants also have moved to propane where we had the cylinders in place. Again, this kind of unprecedented increase has never been envisaged. And in one of the other plants, we've ordered another propane tank. So wherever we could, there is also an issue of how much land is there in the yard because there's a fire and safety over there. So wherever we are able to move to propane, we are also doing it. Like I said, 2 of our plants are running on propane. But today propane prices have also become pretty much the same as gas pricing, a couple of rupees difference.
Correct. Got it. Also, one more thing. Can you break up your bathware into sanitary fittings in terms of revenue for this quarter and YY?
Sure. 35 crore rupees was sanitary ware, 22 crore rupees was bath fitting in this quarter, and in 9 months it's been 86 and 55.
Got it. That was helpful. Thank you. I'll follow up in the queue.
Thank you. The next question is from the line of Vivek Tulsian from Newmark Capital. Please go ahead.
Yeah, thanks for taking my question. On the volume growth, I think it was slightly underwhelming, and when you also look at the peers, I think the performance was slightly better on the volume front. Would you say this PVT issue is specific to us, or it's a more generic issue that should impact others as well?
No. If you compare industry leader, it is specific to us because he has two PVT plants, fairly large PVT plants in the north. So there is some dependence. He has in fact 4 PVT plants, 2 in Morbi which are JVs and 2 in the north which are his own. So to that extent, he is running the northern plants on coal and partly on the RAS gas. So he has a price advantage in the north from a gas perspective and a coal perspective. That has also given us a little bit of hit where we've been not being able to procure the material at the right price, considering that there is a freight element in the north. So yes, it is specific to us and it's not a generic thing as far as industry leader is concerned or the top 1-2 players are concerned.
But as you are saying, if gas prices come down, this should get resolved by itself and things should get back on track.
Yeah.
Understood. The other question was on the net debt. So our net debt has gone up Q on Q. Is there a specific reason for that? Is it because of the capex that we've done for our 3 plants?
Yeah.
Yeah, Vivek. Hi, Vivek. So yes, it has gone up and primarily because of the reduction in the cash balance which was deployed towards the 3 projects which is going on. So it is primarily because of that.
Understood. Perfect. Thank you so much.
Thanks.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. Anyone? As there are no further questions, I now hand the conference over to Mr. Somany for closing comments.
Thank you so much. We are looking at a fairly reasonably decent quarter considering January has had a 15-day hit because of COVID and the alternate day market shut in pretty much all of India. But hopefully we should be able to make that up and increase our volumes in quarter 4 and partially able to source materials in the PVT segment. But from a future perspective, I think we are more excited for the new 3 plants to start and looking at a good next year. Thank you so much.
Thank you very much. On behalf of SKP Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.